the first quarter of 2010 in the books, we are taking a look at some of the ETFs, winners, and which ones to watch in the second quarter. Tom Lydon is editor of ETF Trends.com. All right, Tom, what should I be focused on here in the second quarter?
Well, in the second quarter, David, consumers have had a lot of restraint so far with the recession, but now with these economic numbers looking that much better, the Power Shares Leisure and Entertainment ETF is poised to do very well. Weather's nicer, fast food restaurants should be doing better, advertising sales are going to continue to increase. Companies like Liberty Entertainment, Wynn Resorts, Vegas is starting to show a little bit of signs of life. So that's something to consider. There's a lot of talk about industrial materials, so the Spider Metals and Mining ETF. Again, the idea here is rather than buying the spot gold or silver itself, buy the miner because, for example, gold, it takes $275 to get that ounce out of the ground, selling for over $1,100 an ounce now. Big profit margin that we as consumers can benefit from.
Right.
And then finally...
Yeah, go ahead. Go ahead.
Well, finally, all eyes are on South Africa. We've got the World Cup coming up this summer, and there are South African banks, metals and miners there as well, energy companies. They're just coming out of their first recession in over 17 years. So I think they're also poised to do well, and they're going to get a lot of attention this summer. Now,
do you recommend these ETFs because you believe ultimately that people will start to look to them to get exposure to these areas, not necessarily because the areas themselves will start to perform well?
Well, what we do at ETF Trends is we're looking at the trends, and all these ETFs are above their 200-day averages. They're also, from a fundamental standpoint, the stocks and the underlying stocks in these areas are doing well based on economic conditions. So we put the technicals and the economics together, and based on our analysis, they are poised to
That's what you come up with.
Now, what do
you I know on ETFs there are some that are double short, triple long, and there's a real correlation problem there. Is that a warning sign that you send out to some investors who look at ETFs?
Absolutely. There's been a lot of discussion about inverse and leverage ETFs. You have to know what you're buying. And again, for some that are looking to hedge, they're appropriate over short-term periods of time. They do exactly what they're supposed to do. However, over extended periods of time, they're not for the average investor. And they're built to provide that leverage, sometimes double or even triple leverage.
Right.
But they're not for everybody.
But they should be viewed as trading vehicles, is what I hear you kind of saying, in a sense.
Absolutely. That's absolutely.
Not for long-term exposure to these kinds of industries that you're talking about if you want to actually make a fundamental bet on a particular sector.
That's right. And these recommendations we're making, these are not leverage ETFs. These are diversified groups of stocks in certain sectors or asset classes.
All right, Tom, thanks for the picks. Appreciate it. Tom Lydon. Aaron, back to you.